Welcome back to the channel, where we dive deep into the financial choices that shape our everyday lives. Today, we're going to explore a topic that affects nearly everyone: credit cards versus debit cards. Both options have their own set of advantages and disadvantages, and it's crucial to analyze each one carefully to determine what might work best for your personal finances. So, let's get started. First, let's talk about liquidity. When you use a debit card, you are spending money that you already have in your bank account. This means you have immediate access to your funds without the risk of accumulating debt. In contrast, a credit card allows you to borrow money up to a certain limit. This can be advantageous for larger purchases or emergencies when cash flow is tight. However, it also introduces the possibility of overspending and accruing interest on unpaid balances if not managed properly. Think about your current financial situation. Are you comfortable with the idea of borrowing money and potentially incurring debt? Or do you prefer the certainty of spending only what you have? Next, let's consider accessibility. Debit cards provide straightforward access to your checking account funds, making transactions simple and transparent. You can easily see what you've spent since it directly deducts from your available balance. On the other hand, credit cards often come with additional features like rewards programs and cashback offers that can make them appealing for everyday purchases. Many people find that using credit cards can yield perks that debit cards simply don't offer. However, those perks often come with annual fees or conditions that may not be worth it for everyone. Reflect on your spending habits. Do you tend to spend more wisely with a debit card? Or do the incentives of a credit card motivate you to use it more frequently? Now let's talk profitability. Credit cards can potentially enhance your financial portfolio when used responsibly. By utilizing them correctly, paying off balances in full each month, you can build a solid credit history, which is crucial for larger financial commitments, like buying a home or securing lower interest rates on loans. Conversely, debit cards do not impact your credit score at all, meaning they don't contribute to building a credit history. For many, this could be a significant factor when considering future financial endeavors. Which aspect resonates more with you? Building credit through responsible borrowing or maintaining complete control over your current cash flow? The next point is risk. With debit cards, if someone gains unauthorized access to your account, they can drain your funds quickly since they have direct access to your bank account. Although many banks provide protections against fraud, there is still an inherent risk involved with losing access to your hard-earned money for an extended period while disputes are resolved. Credit cards usually offer better fraud protection. Any unauthorized transactions can often be disputed more easily without affecting your immediate cash availability. However, carrying a balance on a credit card introduces its own risks. Accumulating debt and high interest charges can quickly spiral out of control if not managed carefully. Consider your comfort level with these risks. Would you prefer the immediate access but potential vulnerability of debit cards, or the safety net provided by credit cards alongside their associated risks? Finally, let's discuss psychological factors. The way we perceive and manage money is heavily influenced by our chosen payment methods. Some studies suggest that people may spend more when using credit cards compared to cash or debit due to the pain of payment being less pronounced when swiping plastic versus handing over physical cash or seeing a bank account decrease immediately after a debit transaction. For many individuals, this could lead to impulsive spending behaviors that they wouldn't engage in otherwise. It's essential to reflect on how you interact with money. Do you feel more accountable when using debit because it's tied directly to your bank balance? Or do you view credit as an opportunity for flexibility and rewards? In conclusion, both credit and debit cards have unique benefits and drawbacks that warrant careful consideration based on individual circumstances and preferences. Whether you're drawn towards the instant liquidity of debit or the potential profitability of credit, remember that there is no one-size-fits-all answer. It's about what aligns with your financial goals and lifestyle. I invite you to reflect on these points and share your thoughts in the comments below. Which option resonates more with you? Have you had experiences that shaped your choice between credit and debit? Let's foster an engaging discussion. Don't forget to like this video if you found it informative and subscribe for more insights into managing your finances effectively. Thank you for watching.